All right. Happy Friday, my friends. Bear with me real quick because someone is getting all up in my business right now. Wait for it. Here it comes. Hi. What are you doing? Are you coming to say hi and join in for the 100th episode of the Dividend Happy Hour? I think he is. Everyone's here tonight. The gang's all here. Peanut knew we could not miss this very special live stream. I know, huh? Very exciting. Happy Friday, my friends. I hope you guys all had a fantastic day and a fantastic week. Thank you so much for tuning in tonight. This is a very, very special episode of the Happy Hour because, as you guys know, this is the 100th episode. That's right. So I started doing this live stream now, I guess, about this time-ish, 2 years ago, right? So, guys, 100 episodes under our belt is, yeah, it's pretty wild. I won't go on too much of a tangent here, but I remember when I started doing this stream, when I first wanted to start doing this, I was so like, even going into that, I was watching the first episode prior to going live, just watching a little bit. And I remember it and I could tell from watching, I was so nervous. I had like the worst, the worst stage fright going into that stream because it's such a different animal than, you know, just recording a video, editing it, chopping it up and all that stuff. It's totally different feel. But man, I cannot believe, and I still get a little stage fright from time to time, if I'm being honest, but I cannot believe we're 100 episodes deep. And what's crazy too is I know for a fact, an absolute fact, that some of you guys watching, some of you in this stream right now, there's 110 of us. Some of you have been to every single one of these live streams. You've tuned in live to every single one of these Dividend Happy Hours. And so whether that's you or whether this is your first time tuning in or anything in between, I want to thank you guys all so much for all the support over the years. I couldn't be, excuse me, I couldn't be more grateful to be doing this. And you guys are the bomb. So thank you for that. But let's see, let's get into it. I think we'll make this a little bit of a longer stream tonight. My wife's working, so she might not be home for another hour and a half or so. So I think we'll just kind of, I don't know, we'll go until it's time to go, I guess. But why don't we plan on doing a little bit longer stream tonight at least, and we'll just kind of take it as it comes. But guys, why don't we kick this off, this very special live stream off the best way we know how. Grab whatever it is you're sipping on. I got something good here. I'll tell you about it in just a moment. But grab whatever it is you're sipping on tonight. Let's do a quick cheers. Here's to you guys. Once again, thank you so much for all of the support over these years with the Dividend Happy Hour. It's been a lot of fun. This is something I look forward to every single week. It's one of the highlights of my week, and it's because you guys make it so special. So thank you. Here's to you guys. And also, here is to the pursuit of that sweet, sweet cash flow. That's really what's bringing us all together, is those dividends. So here's to the dividends. And cheers. Happy Friday. Let me know a few things here in the live chat, guys. Number one, I want to know which stocks you bought this week. I want to know what you added to your portfolio. Okay, number two, I want to know, what are you sipping on tonight? What did you bring to drink to the 100th episode of the Happy Hour? Let me know that in the chat as well. And also number three, did anything cool happen in your guys' portfolio this week? Did you hit any income milestones? Did you get your 100th share of realty income or your 1,000th share of SCHD or something like that? Anything cool that happened to you guys? I want to hear about it in the chat here. And actually, for tonight, I want to hear a fourth thing from some of you guys out there. If this is your first time tuning into the live stream, I'd love to know if that's the case for some of you guys watching right now. So if this is your first time tuning into the Dividend Happy Hour, let me know that in the chat here. I'm curious to see I'm curious to see some of the first timers here. But anyway, and I apologize for the lighting. You guys know how it goes, but it'll be okay. I'm going to scroll up and just give some shout outs here. See all who we got in the building. And go all the way to the top. And just real quick, by the way, I am sipping an iced decaf coffee with a little bit of protein. I said coming into the last few weeks, I know, guys, I said coming into this that I would be, that I'd have like a margarita or something like that on the stream tonight to celebrate. But if I'm being completely honest, I went down to the strip on Wednesday. I had quite a time, and I just don't have it in me to have a margarita or anything. I got my fill a couple days ago, and so yeah, I'm gonna be good. So, and I apologize. I feel like I let you guys down a little bit in that regard, and I know I said I would, but I just it's just I just can't do it. So, but anyway, it'll still be a fun stream nonetheless. Like I said, we'll go a little bit long tonight, so hopefully that makes up for my lack of alc or lack of margarita. But anyway, let's scroll up to the top here. I want to give some shout outs to everyone in the building. I see a lot of the usual suspects. We've got the backdoor assassin, Kevin, in the building. We've got Paolo's here, my man Zal. Watch Ryan come in sloppy drunk already. I know, man. And I'm sorry once again, guys. I know Striper Kid knows me too well. I don't think he'll drink. I sincerely planned on it. I only have, I don't really have any alcohol at my house right now. I have like one canned Trader Joe's margarita, and I was saving that for tonight. But yeah, like I said, I just don't have it in me. But maybe next week, maybe I can make up for that next week. I do feel like I owe you guys one. So yeah, maybe twist my arm next week going into the stream. So, and I'm going to Mexico in a month too, like exactly a month today. I'm going on my honeymoon to Mexico. And so I told myself, all right, I'm going to be as good as I can. I'm just going to like abstain from now until Mexico, just give myself a break. And that way I can, let loose and have a lot of fun in Mexico there. I'll certainly get my fill of margaritas when I'm there. So anyway, who else we got here? I see Chris in the building. Swampy's here. Shamizzle's in the bizzle. Yeah, Ryan will be streaming from Juan's Flame and Fajitas. I wish, man. That sounds so good. I had In-N-Out earlier this week, though. On Wednesday night, I did have some In-N-Out burger. That was good. We got Fast Eddie here. Great Gods here. Adon. David's here. Good to see you. El Dynamico. What's up, my friend? We got Alex here. First time in the live stream for Alex. So welcome aboard. Thank you for tuning into the happy hour. Hope you enjoy this. I'm guessing we're going to probably go till like, I would say probably at least 6:30 my time, Pacific time. So that's going to be 9:30 Eastern. And there's 205 of us in the stream. We have got the crowd tonight, guys. Thank you so much. This is awesome. This is honestly, it's a really special milestone, I think. So I'm happy to celebrate it with all of you. Who else we got here? I see Joe. Wing Addictions here. Zero to Hero. We got John, Mike D. How you doing, Mike D? Shout out the Beastie Boys. Oliver's here. David. Yeah, there we go. You know how we do it. Like I said, Peanut was here. He wasn't going to miss the stream, although I think maybe he stepped out already. Maybe for a cig or something like that. So anyway, let's keep going here. I see Dominique. Yes. Franklin's here. Private T. There you go. I love it. It's 2 a.m. where I live, but best believe I'm not missing episode 100. That's so awesome. So awesome. That's so funny. Paolo, could you imagine? So tonight you'll do one shot per episode. Yeah, right. Let's see. Keep going. Dividend Cowboys here. Good to see you. Mountain High. Wilmer. Charles here. In with a Heineken. Nice. Very nice. Sir Dude Broman's here. Good to see you. I know, you guys. I was getting choked up. No, I had a little frog in my throat. And I'm sorry about the lighting, guys. It happens. Wilmer's here, sipping some Terramana and Red Bull. I'm actually curious about the Terramana. What do you think about that? Is it good stuff? I know. So that's the Rocks tequila, Dwayne Johnson's tequila, and I've kind of been curious about it, but yeah. So let me know how it is. I'm curious. There we go. Zal says, long-time listener, first-time caller. I just want to say thank you. Yeah, you're the man, Zal. Kevin Burgess is here. Good to see you. John's here. Mike Risk. There we go. Okay, now we're getting into the purchases, and I'll try and catch up here pretty quick. So I see Johnson & Johnson and Starbucks. That's what I bought this week as well. I think I just bought some Starbucks. I think I almost bought like 2 shares of Starbucks. And actually, let me just jump over here. Let's take a look. I'll show you guys where my Starbucks position is at real quick. And by the way, we're taking a look at my dividend portfolio tracking spreadsheet here. You can start using this spreadsheet for free to track your portfolio if you want to check it out. There's a link to it in the description. But going over here, taking a look at the positions, guys, I'm up to about 66, almost 66 shares of Starbucks. And I think when I started buying it, I guess buying it again early last month, whenever it went on that, whenever it had its dip, I think it was at maybe 55-ish shares. So I've added about 10, 11 shares in the last month and a half or so, which is really nice. And prior to making these purchases, my average cost, I believe, was like mid $90 per share range. So it's good to see the average cost coming down a bit more. By next week, we'll be under $88. I would imagine I'll be buying more Starbucks again next week. It's really been between that and Johnson & Johnson. Johnson & Johnson's certainly been like a steal lately. It's, almost 149 per share. My average cost, I actually didn't realize this till just now. My average cost is officially under 160. So that's good to see. But anyway, back to you guys. Cameron's here. This is Cameron's first time. Excuse me. I lost it. We got a super chat. I'll jump over in a sec. Let me see. Cameron's first time in the live stream. So Cam, welcome aboard. I hope you enjoy the stream. And just so everyone knows, if this is your first time, I typically do this live stream every single week, starting at 5 p.m. Pacific time, 8 p.m. Eastern time. There's some, occasions where for some reason or another, I'm not available to stream, but more often than not, for sure, we're doing these streams Friday night. So we got a super chat from Joe for $10 here, it looks like Joe's first time live. And Joe, first and foremost, thank you so much for the super chat. That's super awesome of you. And you don't have to do that, but thank you. Have never made it live, but I listen all the time. Had to make it live tonight. I also crossed $100 per month in dividends in my portfolio. That's great this week. Here's 100 dimes. There you go. Man, that's awesome. Congrats on the milestone. And you know what? That second $100 per month, so going from $1,200 to $2,400, it's going to come even faster than the first. So keep up the good work, my friend. And once again, thank you so much. You're too kind. Let's see. Ooh, interesting. Wing addiction. No buys this week. Saving for vacation. Wing addiction. Let us know where you're going. Let us know in the chat. There we go. El Dynamico. Been loading up on some more. I'm guessing it's just Realty Income this week, because it's my only position that is down, and also sipping on a cup of Joe. Very nice. Love it. That's pretty cool. Private T, 80th share of Main Street Capital Corporation. That's awesome. Jazdeep's here. First time for Jazdeep in the live stream. So Jazz, welcome aboard. Happy to see you here in the stream. I hope you enjoy it. Yeah, it's going to be a fun stream. Well, so far it's a fun stream. At least I'm having fun. I hope you guys are too. Yeah, let's do 100 more, Ryan says. Absolutely. I am totally on board for that. So definitely. That's so funny. Salvatore says, if it's anyone's first time, you definitely missed the best 99 videos to date on social media. Dude, that's great. Thank you. That's awesome. Razzy's first time in the stream. Welcome aboard. That's so cool. It's so cool. We always get, I feel like every week there's at least one or two. And tonight there's a handful of people's first time in the stream. It looks like we got another super chat here. I don't know what this is. CRC, $2,500. What is CRC currency? Oh, Costa Rican colon. So that's really cool. That's awesome. But anyway, Ricardo here says, how would you go about investing large amounts of money? $80,000 to $120,000. Would you dollar cost average every single week or so? Or would you use another strategy? I'm actually going to screenshot this question because that's a really good question. It'd be good to do in an upcoming video. And Ricardo, thank you so much for the super chat. That's super, super nice. And once again, you don't have to do that. But to answer your question, how would you go about investing larger amounts of money? Pretty much exactly what you said. I would not lump sum invest that entire amount at once. That's a lot of money. If it was me personally, I would dollar cost average that. And I'm so sorry about this, guys. I'll apologize probably 10 times more. I know it's a little bit distracting, but I personally would dollar cost average that amount over time. And, you can split it up however you want, whether it's like you could do $1,000 a week, and if you did $1,000 a week, for example, and you had 120,000, you could spread that out across the next 2 years, which is a pretty long time. I mean, and if that's too long, you could even ramp it up even more. Um, do $2,000 a week, and that gets you there in about just over a year. And I think that's that'd be a pretty good way to go about it. Especially if this is your first time, like if you're just kind of now getting into investing, I'm certainly a proponent for taking it slow and kind of easing your way into things until you find your groove and build up some confidence with what you're doing. And the beauty of dollar cost averaging is that no matter however much you start with, you can always increase your contributions from there. So even if you started out like $100 a week, I think that's honestly, if this is your first time with investing, definitely just start by taking it slow, and then you can ramp up your contributions over time. Because it's kind of an adjustment, seeing the daily ups and downs. I know for a lot of new investors, it can be a bit overwhelming, especially if it's a smaller amount of money. So once again, I'm a proponent for taking it slow and dollar cost averaging. But yeah, and to close the book on this, if this is your first time, that's kind of the how, the what to invest in. Keep it simple at first. Just rock with some ETFs, and once you find your groove and establish a little more confidence with what you're doing, then maybe from there expand into individual stocks if you even want to. You might just really like that hands-off approach with the ETFs, but that would be how I'd approach it. But really good question, and thank you for asking. And once again, thank you so much for the super chat, guys. We've got about 240 people in this stream right now. That's crazy. I wonder if we can hit like an all-time record of people in the stream. I don't know exactly what that number is, but I think it's somewhere between 250 and 275. We have yet, I think, you guys might remember better than I do, but I think we have yet to break into the 300 people in this. I think we have yet to cross 300 people in the stream at one time, and that would be crazy. So nobody leave. Even if you have to go somewhere, just leave it on. Let's see. Salvatore says, I need some dividend help. I mean, yeah, whatever questions you have, just drop them in the chat here for sure. Let's see. Mike, this is a cool little milestone. Surpassed $2,500 of annual dividends. Good job, my friend. Love it. Paolo, where in Mexico are you going? I am going to Cabo, or we are going to Cabo. It'll be a lot of fun. Really excited for it. We're going to go to Cabo for 5 days. So I'll be there July 21st, which is my birthday, actually, to the 25th. So I think that's just like a Monday through Friday or something like that. I don't remember, but I think it'll be fun. Gosh, even this is bugging me. Yeah, Zal says, I've actually decided to cut alcohol myself. Other than 2 specific events I planned ahead of time to drink, I'm going sober for health reasons. Yeah, I get that, man. I just 280 people in the chat. Guys, in the stream. This might be the record right now. 280 people in the stream. 275. This might be a record. So, guys, this is awesome. What a night. What a great night. Yeah, Zal, I get that. And I totally understand that. It can definitely take a toll on you. I've certainly felt that. Not that I'm old, but I at 30 years old, I definitely feel the impacts a little bit more than I did even just a few years ago. So yeah, I just and I really truthfully don't drink too often. Like at most, I'll have maybe like a drink once or twice a week at most. And that's kind of like a lot. Historically, that's kind of a lot for me. But I'm typically like, I'll usually go through periods where like months at a time where I have no alcohol. But I feel like lately we've been having fun here in Vegas. We've been going down to the Strip and stuff like that. So it's been fun. And, we got married a couple months ago. And so between then and now, I feel like there's just circumstantially, I've been in more situations where I've been consuming alcohol. It's whatever, but yeah, I'm kind of ready. I'm kind of okay. Like maybe just taking the next month off until Mexico, and then just definitely like partaking there. So I think that'll be a good way to go. So let's see. Let's keep going here. About 10 minutes behind. Yeah, there we go. This is cool. Ricardo says, congrats. I watched the very first, most in between, and the 100th. That's awesome. Yeah, like I said, I have no doubts that there are some of you guys out there who have tuned in live to every single one of these streams, which is just wild. Let's see. Continuing on, looking at some purchases, some more purchases here. I see a couple good purchases here from Bubble Chaser. We've got Visa and Vici Properties. Nice. We've got Great God. Solid buys. Keep it up. Love the V. Maybe I skipped one here. Oh, Kim. Sold out of, okay. So some action here for sure. Sold out of Pfizer, Bank of America, CVS, and NVIDIA, and then bought Visa, Agree Realty Income, Starbucks, and a little Vici. So definitely loading up on a few REITs there. There you go. There we go. Maybe I just need to sit just like this. There we go. Don't move. Nice shopping spree, Cam. Good. Sounds like overall good moves in the portfolio. Yeah, hopefully you locked in gains on all of those there. So let's see. Kevin Burgess added to Johnson & Johnson and Lamb Weston this week. There you go, Kevin. Nice. Very nice. Yeah, I saw in the Discord, I think you just went in on either 50 or 100 shares of J&J. That's nice little tranche there. So good stuff. I actually think I saw that in your Discord group. Nice. Look at this, guys. Zal hit a cool milestone. Stock market portfolio milestone this week, 250K. That's crazy. A quarter way to $1 million. Good job, Zal. That's huge. That is very huge. Fernando says, first timer in the building. Fernando, welcome aboard. I'm glad to see you tuning into the stream, and I hope you enjoy it. Yeah, Vici. I do think it's a good time to buy some Vici right now. I'll be talking about that, not in my video on Sunday, but I'll be talking a bit more about Vici in next Wednesday's video. It's going to be I'll just spoil it right now. It's going to be front and center right there in my 3 deeply discounted stocks video for going into July. So I wrote a little bit about it today, just kind of in preparation. So that'll be fun video. Those are always fun to put together. But yeah, Vici's looking good right now. Let's see. There we go. Jim with a nice little shopping spree too. Big purchases were Verizon, ATO, which what is ATO? Let's go check this out real quick. So I recognize the ticker symbol. Okay, Atmos Energy, and then MFC. What is that? Manulife. Huh. What are the dividend stats looking like for this one? Nice. Look at that, guys. That's really solid. 4.4% yield, near 9% growth rate, and a 10-year dividend growth history. That's like triple threat in the dividend department right there. So looking really good. What was the other one? AOS. Atmos. No. ATO. Excuse me. ATO. These are some nice looking dividend stats as well. I mean, classic dividend growth stock. Near 3% yield, 9% 5-year growth rate, and they're a dividend aristocrat with 40 years of growth. So, you know what? And actually, both of these I should add to my watch list here. Watch list there. And then the other one was MFC. Just to keep an eye on them. Any dividend stock I come across, I just added this watch list. It's pretty extensive at this point, like multiple hundreds of stocks for sure. Okay, let's go back over here. And wow, look at this, guys. John's at over 1,100 shares of SCHD. That's very impressive. This is really nice. Sebastian, congrats on 100 episodes, Ryan. You're a stand-up, honest guy. Well, thank you, my friend. That's extremely nice. I appreciate that. Not many out there. Bought some SCHD and VU this week before the ex-dividend date, Wednesday. Yes. And actually, I'm glad you brought that up because I've been getting a lot of questions about SCHD's dividend announcement. And I still at this point, I do not believe they've announced their pay date for this quarter. So yeah, they have not. So, but historically, let's go look at maybe the payment history here. if we scroll down, so like last quarter, they declared it on February 19th. So for this quarter, that would have been like last month, they should have declared it. The ex-dividend date should have been like yesterday. The pay date should be like sometime early next week. So, but it seems like it's all over the place, right? I mean, it looks like it's usually towards the end of the month or like mid month when we get to the fourth quarter. In December, in that fourth quarter, it's like towards the middle of the month, but otherwise it's towards the end. So looks like last year it was paid on the 26th. The year before that, the 27th, 28th, 29th. So it should be next week, but at the same time, there are instances where it gets pushed back until July, with the declaration date, interestingly enough, not being announced until the 25th. So I guess hang in there, guys. They'll definitely announce it soon, right? Like they'll definitely announce, and even this right here too, in 2018, they announced the dividend on the 25th, but they ended up not paying it for just a few days after that. So I'm sure we'll hear more information next week. But yeah, hang in there. They'll definitely be getting that dividend out for sure. So let's keep going. Let's see. Yeah. Okay. So I'm about 15 minutes behind in the chat. This is cool though. Dominique, sold all my furniture except my couch. Moving in an Airbnb next week for 3 months. That's awesome. So guys, Dominique is and let us know in the chat, Dominique, when exactly this, I'm guessing in the next week, right? But she's like retirement now. She's ready to go. She's living that financial freedom lifestyle. So big round of applause for Dominique. That's awesome. Crushing it. Absolutely. Let's see. Mike Risk. Ryan, what are your thoughts on CMG, which is Chipotle, doing a 50-to-1 stock split? I don't have any, truth be told, I don't have any serious thoughts on it. I love me some Chipotle though. That sounds delicious right now. Oh, maybe we'll go to Chipotle for dinner. We don't have any plans to, but that just sounds way too good. Yeah, I don't have any serious thoughts about a 50-to-1 stock split. I mean, the price is obviously definitely up there. So doing that 50-to-1 split, which let me pull up my calculator real quick. So 30 to 10 divided by 50. So that's going to make the share price about $64 after this. And I think that a lot of investors are going to find that to be more accessible. There's certainly some people who are sitting on the sidelines because they don't want to they don't want to spend $3,000 or $3,200 on one share of Chipotle. It's people would rather buy 50 shares at $60 than one share at, $3,200. So, maybe we'll see more people picking up Chipotle after the stock split. And where is it in the news here? Where is it? Can I search? No. I don't know. But yeah, outside of that, I don't really have any serious thoughts on it. Williams-Sonoma also announced a 2-for-1 stock split recently. So that'll be cool. But same thing. Don't really have any serious opinion about it. Yeah, this is a great question, actually. Trevon asks, have you ever thought about investing in LVUMY, which is basically Louis Vuitton, Moet, Hennessy, whatever. Yeah, I've considered it. I think it's a really interesting company. They've obviously got a lot of really iconic luxury brands. I can't exactly tell you and you know what? While we're here and on the subject, I'm going to add it to this right here. So this is another like watch list that I have of, as you can see, well, let me put it up on the screen, then you can see it. A watch list of companies that I might want to buy. So these are ones that I find are within my circle of competence. They're ones I understand. I can wrap my head around how they make money, and they seem interesting to me. but they're also ones that I would maybe want to dive a bit deeper on. And I might actually remove Google from this list because I'm already buying it every week in the S&P. It's already one of the top 10 holdings there. So I just don't know if I want more exposure. I'd be fine with more exposure to Google, but I just don't 100% know if I need it if I'm already buying it every week in the S&P. So I might remove that. But let's add LVU. There we go. So there's two different ones, LVMHF or LVMUY. And maybe one of you guys can let me know in the chat real quick if there's a difference. We'll add MUY since it was the one that asked about. So, but anyway, this would be a good one to consider. And I'm actually just now looking at the share price performance. Interesting. Near 10% drop in the last month, down 6% year to date. They're not too far off from their 52-week low, down almost 17% in the last year. Really solid dividend stats. And from what I remember, the financials look pretty good too. Yeah, this does look pretty solid. Wow. Nice. Yeah, I don't know why I hadn't really given this one more thought before. I think it's just one I haven't really thought about. But yeah, thanks for bringing it up. I'll definitely spend some more time with it because that could be a good company. And we have another super chat here, guys, from a few minutes ago. Another one from Ricardo for 5,000 Puerto Rican colones. Is that? I think that's what it was, right? Thanks. I'm new to stocks, trying to roll my crypto profits into the stock market to manage my risk. I'm 23. Great job for getting started so young. So I don't really like ETFs. What's your reasoning behind ETFs? They're too stable for me, to be honest. I just think ETFs, and I don't know how long you've been investing. I don't know your background or I just don't know anything about you as an investor or as an individual. So I always default to suggesting ETFs for investors, especially those who are just now starting out. I mean, I don't think you said ETFs are too stable for you. I don't think stability is a bad thing at all. And there's some ETFs out there that have actually performed really well. Like if you look at ones like, we'll jump over to the screen. Let's look at SCHG. It seems like, I'm guessing if ETFs are too stable for you, you want more growth, you want more share price appreciation. I mean, SCHG is up 37.5% in the last year. Another one, QQQ, another ETF, is up 32, almost 33% in the last year. So both of those are outperforming the S&P 500, which is up 25% in the last year. So, some of these ETFs are generating really solid returns. It's certainly going to be different than crypto, which undeniably is going to be less stable than investing in ETFs. But once again, I don't think stability is a bad thing at all. And actually, as far as dividend investing goes, I think stability is something that you actively seek out. I think it's stability and reliability is something you try and prioritize. So, but hey, man, if you're 23 years old and you're looking for maybe something with a bit more volatility, then I don't know, maybe I don't know. You definitely maybe would take a different approach than what I've suggested, but still, 80K to 120K. Yeah, that'd be a lot of money to put into something that's not stable, in my opinion. I personally wouldn't feel good doing that, but that's just me. So hopefully that answers your question. I know that was kind of a roundabout way to go about it, but hopefully it made sense. Okay. Matthew, this is a good question. You always post your 60K portfolio updates, but what is the total of all your holdings? Stocks, bonds, ETFs only? Well, my two investment accounts are tracked right here. Well, where'd it go? Come on. There we go. My two investment accounts are right here, my taxable account and my Roth IRA. So I have 70,500 invested in equities. But then I also have a high yield savings account with Ally that I've been building up for a while. And I've got a good chunk of change in there as well. that hopefully at some point in the near future, my wife and I will use for a down payment on a house or a condo or something like that. So, so there's that as well, but there's not really much of a reason. There's really not much of a reason to talk about that. As far as stocks go, it's this right here. And I feel like I'm on track for my age for sure. I definitely feel like I'm on track for my age. I'm probably ahead of the game, if anything. Still, like most of my friends, this stuff's still just not even on their radar. As far as I know, I don't even know if they're contributing to like their company 401ks or anything like that. They might be, I just don't know. But yeah, I would say that I feel very much on track. And once we get this house stuff behind us, I'd like to ramp up my contributions more, but I don't want to do that until we get this house thing situated. So yeah, really good question though. Here we go. There we go. We should drink every time the sun hits Ryan's nose. There you go. Drink. Take a swig. This is a good question too. So I'm not looking for dividend income for 5 years or so. Is it better to go heavy growth for the 5 years and switch to dividends, or start straight off into dividends? Excuse me. I don't know. I think you can go either way. I don't know. And it's just so hard to say what these next few years are going to look like. Just on the market. And it's going to be interesting to see how much more appreciation we see across the board. Things have been hot and heavy for a while now. So I don't know if that continues for the next 5 years, then it'd be nice to be heavy in growth, but there's no guarantees that that's going to be the case. And on the inverse of that, on the other hand, if for some reason or another things head south in a meaningful way on the market, then you will want to be invested in things that are cash flowing, because you'll still be, well, you will feel better, and probably will see less drawdowns investing in dividend paying stocks that are more stable and maybe a bit more, what's the word I'm looking for? I guess stable is probably a good word. Stable and mature. So the type of stocks that like SCHD might have in that fund. So it just depends. A lot of it depends on what's going to happen in the market moving forward, and that's impossible to predict. But I will say, as a compromise here, it's not a bad idea to go into both. And just going back to the whole ETF conversation, that would look like, I think a good split, if you wanted to get the best of really all worlds, would be something like SCHD plus VU, S&P 500 plus some dividend growth stocks, or you could do like SCHD plus SCHG, so large cap growth, with dividend growth there. So it just depends. Like there's definitely going to be more than one way to slice it, more than one way to skin the cat, as I like to say. But it really just depends on what you think might happen moving forward from here. But I don't know. I guess adding to that a little bit more, I also, and there's not necessarily a completely right or wrong answer here. There's so much gray area is in this answer, but a part of me thinks too, like if your ultimate goal is to live off the dividend income, then why not just, at least in part, cut out the middleman and start buying at least some dividend growth stocks right now? So I don't know. It really is a tough question to answer, but yeah, it's a really tough one to give a definitive answer to, I should say. If it was me, I would, I don't know. I'm so biased towards dividend paying stocks, but at the same time, like there's a lot of great dividend. Going back to getting the best of both worlds, I do think ultimately dividend growth stocks specifically can offer that. And the reason for that is because for a company to be able to continue consistently growing their dividend over the years, they have to continue growing their earnings and their free cash flow. And that's pretty much at a very basic level, those things, earnings growth, free cash flow growth, in general, fundamental growth of these companies is what's going to, increase the intrinsic value of those companies, which is what's going to over time increase the share price. So I do believe if you're investing in good dividend growth stocks that are growing their dividend at an aggressive clip, and have the capacity to do so, you'll inherently see capital appreciation with that as time goes on. So hopefully that all of that makes sense. Once again, very roundabout answer to your question, but really good question, actually. I'm actually going to screenshot that as well, because that is a great question. I always try and do that. So anytime you guys ask these really good questions, I'll screenshot them. I'll write about them in the newsletter. And sometimes I'll even turn them into like full videos. These last couple of months straight, I've been putting out like a monthly Q&A video that's basically just responses to a lot of these great questions. So I really appreciate all the questions, because it's it's fun to answer them. So let's see. Keep going. Ooh, Mo Money. You should check out the new EPD article from Stephen Fiorillo on Seeking Alpha. Let's check it out right now. We'll just we'll scan it, see what it's all about. So EPD, I think he's a fan of EPD from what I remember. Yeah, strong buy. Okay, EPD underperforming, but this dividend aristocrat is a buy. Let's see. Previous article. I'll circle back and really read into it. Read it later, but I just kind of want to see what it's about real quick. Okay, the Seaport Terminal. Yes. Coming online there. Let's see. Okay. Oh, look at that. Debt going down a little bit. That's nice. Love to see that. Yeah, EPD's been a really strong performer. I actually think it's probably one of my better performing positions on a total return basis. Yeah, share price, I'm up almost 20%. Total return it's about double that. So all looking pretty good. Which other one has actually surprised me how well it's doing is Blue Owl Capital Corporation. I'm up almost 42.5% on a total return basis. Apple's been crushing it too lately, actually. Things in the portfolio are looking pretty good. I mean, there's a couple laggards here, obviously, like just looking at the total returns. J&J's down a little bit. KRC and WP Carey, I'm definitely down on. Starbucks, I'm down on right now. But for the most part, guys, I feel really good about where things are at in the portfolio. I think at some point soon I will be adding Vici Properties, maybe sometime next month. But as I've talked about before, it's been so hard to want to do that when, I'm still down now, just talking share price, when I'm still down 9% on Starbucks, when I'm still down 6.7% on Johnson & Johnson, both of which are two of like my higher conviction investments. I feel really good about both of these companies from a long-term perspective. It's hard for me to want, like, I feel like I should be prioritizing my existing positions before adding any new ones. So, but then again, once interest rates, change, which there's been a delay in that as well. But once that does happen, I do see real estate investment trusts seeing a nice little pop. So I don't want to miss out on getting Vici while it's down, $28 a share. So this is a great question as well. This might be another one to screenshot, actually. When you start a position in a stock, do you scale in? Do you basically, I think dollar cost average in is what Razzy's asking. Do you average in or do you go all in? I have money to invest and I have stocks picked, but I don't know if I'll go all in or buy a few shares with dollar cost averaging. Yeah, that's a really, really great question. And I would say that historically I've dollar cost averaged into everything. Every single week I invest a set amount into the portfolio. And my MO is to basically just invest as much as I can with what I have for that week. And so that's pretty much resulted in me just slowly adding to positions over time. And that's what I did with Visa. That's the most recent addition to the portfolio. When I started adding to Visa earlier this year, I just started small with like one share. And every single week I added one more share of Visa. and really just averaged into it. And over time, it's becoming one of my larger positions. It still has a ways to go. I'd like to keep buying more of it, but that's how I've typically eased into those kind of things. And that's been both good and bad. I mean, that can both work in your favor or it can work against you depending on which direction the share price is moving. And I'll give you a couple examples as to how that has worked against me in the past. And I'll just show you the examples and I'll say what I was going to say. So Apple's one great example of that. So this is one of my smaller positions. It's only 2.3% of the total portfolio. I only have 6.6 shares of Apple. And I started buying into it at a really good price. My average cost is 129.5. But this was another case where I slowly dollar cost averaged into it. And doing so shot me in the foot. I would have been better off, deploying, like lump summing a larger amount into Apple, potentially buying more shares right at the get-go because it's done really well. And what prevented me from adding more is that it really, like, once I started buying into it, it really started taking off soon after that. And it got to a point where I felt like I just got so anchored to this price right here, this 129.45, that I felt like it got so far above that for me that it was too far outside of my buying range. And a similar thing happened with Williams-Sonoma. I mean, I did a little bit better with this one. I have 18 shares of Williams-Sonoma. After the split, I'll have 36 at half this price right here. But it was a similar case to where I averaged into this position every week. And it really, I mean, as you can see, it's really taken off. And in hindsight, it would have been a better move to just buy, 25, 30 shares right at the get-go. But you just don't know what the share price is going to do. So that's, and then we're getting into the whole conversation of timing the market or trying to time the market, which you shouldn't do. But so anyway, it's just kind of a tricky thing. But then again, on the other hand, it can work in your favor. Like if you would have, let's say hypothetically, you started buying Starbucks, you started a new position in Starbucks, April 15th. Okay. You would have been better off just buying one share at a time starting April 15th than lump summing a large amount into Starbucks at that time, because what happened soon after that, a couple weeks after that, you would have seen the share price go from the low 90s and the upper 80s down to $72 per share. And it would not have been a good feeling. So, like I said, in closing, it can work in your favor. It can work against you. But I will say my two experiences with Apple and with Williams-Sonoma have made me realize that there's a definite benefit to having some cash reserves ready to go, just in case you do come across these opportunities that really are no-brainers. Like Apple at $130 per share was a no-brainer. I felt like Williams-Sonoma at the price that it was at was a no-brainer as well. I do remember freaking out. Like prior to me buying it, it was like a week or two before I started buying Williams-Sonoma, it was like $115 per share. Even more of a no-brainer. But you'll come across these instances where it's just so clear that it's just so obvious that it's just this share price is like too good to pass up. It's a steal. And in those instances, when you come across those, I think they're probably pretty few and far between. But when it does happen, you want to be ready. You'll definitely benefit from having cash ready to go. But otherwise, dollar cost averaging's, does take a lot of the guesswork out of it. So there's pros and cons to both sides, I suppose. My gosh, this is so funny. Tell me why TSLY is your favorite dividend ETF. Well, let's just take a look at the, I mean, it's pretty simple when you get to the root of it. It's the dividend yield. Okay. And I just can't look at that and not buy it. So I'll just highlight that and drop the mic right there. What do you think? No, but what's TSOI been up to? What have those payments looked like? I mean, come on. We're not going to get into it, but I'm not surprised. I'll just leave it at that. I'm not surprised. Interestingly enough, to be fair though, with these yield max funds, NVDY has actually done decently well so far. I do think that will not last forever. I do think it will suffer a similar fate as TSLY, and it's only a matter of time before it does. But I will say, so far, it's done pretty well for those who've owned it. So, just not my cup of tea, though. None of that stuff is. So, let's see. Keep going. Wow, guys, I'm 30 minutes behind in the chat. I'm gonna get caught up here. So I'm so sorry. Yeah, this is a good question. So Matt here says, when will you be doing video number 3 of portfolio reviews? I'll be doing it sometime next month. I think I'm going to make that a monthly video series. And at this point, I think there's over 100 portfolio review submissions. So thank you guys so much for letting me, I guess, review your portfolios in the couple videos so far, but all the ones that are to come as well. But yeah, I'll be doing that. I'll be doing that once a month for now. So it's been really fun. I really enjoy doing those. So anyway, let's keep going. I'm going to really scroll down here and get caught up. This is interesting. What do you think about Williams-Sonoma cutting their dividend? They didn't cut. Williams-Sonoma did not cut their dividend. I always have to double check to make sure I'm not missing anything. But no, Williams-Sonoma did not cut their dividend. They just recently announced about a week ago, they actually raised their dividend by 1%, which admittedly is like considerably lower than other raises and definitely a lot lower than their 5-year average. So, but I'm okay with that. I'm okay with them being a bit conservative if they feel like they have to. So that's totally fine with me. Okay, let's keep going. Okay. Yeah. And I'm sorry if I pass up some of your guys' comments. I'm just so far behind here. As is the case. You guys know how it goes. I get on these tangents. We're almost at the hour. This has really flown by. Really flown by. Let's see. Okay, PDS. Okay, I've seen a couple comments about this so far. So take a look at HII, which is Huntington Ingalls, I believe. And I'm familiar with that company. I think they're a defense company, right? If I'm not mistaken. Yeah, aerospace and defense for sure. Builds, overhauls, repairs military ships in the United States. Okay, that's cool. Non-nuclear ships. Okay. Yeah, I know people have their various thoughts on investing in defense companies. My personal opinion is that it's I mean they're necessary, right? Like they're definitely necessary companies. Someone's got to build this stuff. So provides nuclear powered ships, aircraft care. Okay. Yeah, so and I can wrap my head around a company like this, and I do understand the importance and the necessity of these companies. We're seeing really strong revenue growth. It looks like margins are, at least the gross margins, have been declining over the last decade. Operating margin is starting to decline as well, ever so slightly. It looks like the net income margin, however, has stayed pretty steady. And on an absolute basis, it looks like this is slightly trending upward. So yeah, they're buying back shares. That's good. The payout ratios, payout ratio, I guess for the most part, it stayed decently steady, but we can just see from the chart here, it is starting to trend up as well, but still in not a bad spot at all. I would imagine there's definitely going to be some debt on the balance sheet. Yeah, but it's going down though. Not too bad. So on a net basis, we're looking at $2.6 billion of net debt against, okay, 385 million in levered free cash flow, which does look like it's maybe a little bit on the lower end for them. I mean, in 2023, it was 655, so that's a bit better. That's about a 4.5, 5 net debt to free cash flow. So that's not terrible. Somewhere between 4 and 5. That's not terrible. Look at the dividend stats. Yeah, 2.1% yield, 5-year growth rate, 11 years. Truth be told, I mean, it seems like a fine enough company. It really does. But in the industrial sector, I gotta say, like, just knee-jerk reaction. I still feel more partial to a company like Rollins, which, oh my gosh, I need a serious pullback on this company. It's at $50 freaking a share now. God, guys, I remember I've been so patient with this stock. I started looking at it. It was in the mid to low 30s. There was a period of time in this last year, even where they dipped into the mid 30s. Oh, actually low 30s. October of last year, it was 33. I'm kicking myself for not buying it at this point. Such a bummer. But anyway, I would be more partial to investing in a company like Rollins. I've done a lot more research into this one. I feel really good about this company. Pest control, so, and I think their debt's pretty minimal as well, from what I remember. So 741 million in net debt. Yeah, look at that free cash flow chart. Like that's what you want to see right there. So I like that. I love Rollins, and that, just at that quick glance, no surprise to see at the share price just going up so much. So okay, let's keep going. This is a travesty. Striper Kid, what is going on? If you guys haven't already, if you're enjoying the stream, just hit that thumbs up button one time. It'd be awesome. Let's see. Let's keep going here. Okay. Yeah, I see a lot of talk about like NVIDIA and all that stuff. Yeah, this is interesting too. So just a comment for your thoughts. It's an election year. Going to get political. Yeah, definitely. Personally, I've been adding cybersecurity, PANW, CRWD, and NET. The only one of those tickers I recognize is CRWD. Yeah, I think cybersecurity in general is definitely going to be an increasingly important industry to be in. And so that might not be a bad idea to put some of those companies on my radar. Let's take a look at those real quick, because I want to see if any of those are dividend payers. So PANW, Palo Alto Networks. Okay, I have heard of that company. Don't really, at a glance, I don't really like this. I don't know what's going on with that. Are they? I'm guessing they're maybe just more of a dividend, or not a dividend growth. They're just more of a growth company. Okay, so this is just the stage that they're in. So that's understandable. CrowdStrike doesn't pay a dividend, and Cloudflare doesn't pay a dividend either. So like automatically those would not be in my wheelhouse just for that reason. And I want to, while having said that, I do want to make a quick distinction. And I've talked about this before, but when it comes to dividend stocks and being in dividend investing or being a dividend investor, I think that I define that, or I interpret that as basically just being an investor who buys dividend paying stocks. Like it's not someone who solely goes and maybe it was more like that when I first got into investing, and I obviously love the dividends. They're still important, but for me, it's transitioned to, instead of just buying dividends, buying for the dividends, it's now just buying stocks that pay a dividend. It's similar, but it's that definition is slightly different. Instead, I just, in the same way that you want to see revenue growth and earnings per share growth, like that's one of the non-negotiables for me. The presence of a dividend is a non-negotiable, but still within that, like under that umbrella, still the goal is to try and seek out companies that are showing that fundamental performance, the revenue growth and the earnings growth or whatever. And so, and I think that looking at it and approaching it that way is totally different than the dividend investing that's often on the receiving end of a lot of backlash, and rightfully so. Like that type of dividend investing is basically more or less like yield chasing or buying things just because of the dividend. And so when I claim to be a dividend investor or claim to be into dividend investing, when I rep that, and I'll rep that until I die, it's not the latter. It's more so the former, just trying to buy overall high quality companies that do pay a dividend. So does that make sense? Do you guys understand that distinction? And hopefully I'm making sense with that, but that's an important one to make. And I think a lot of us watching are probably like that as well. And I think if that was probably better understood, then dividend investing may not be on the receiving end as much backlash as it is. There's definitely some sketchy stuff that happens when it comes to dividend paying stocks. And I think most of us are not in the camp that builds a portfolio with primarily those type of things. I like to think, and I could be wrong, I can't speak for everyone, but I like to think that more people are kind of like how I just described than like yield chasers. You know what I mean? Hopefully that makes sense. Let's see. Ryan says, Hassan says, Ryan, are you a copy of Christian Eriksen? Who is that? Christian Eriksen. Oh, he's a soccer player. I could see that. I could totally see that. Yeah, like this picture here. I could definitely see that. Looks like we even have like similar hairlines too. I hope that mine doesn't end up, it's only a matter of time. It'll end up like that. I'm headed that way, but yeah, I definitely see a resemblance there. That's funny. Okay, let's keep going though. It's 6:03. We'll just keep it rocking. I haven't heard from my wife yet. So we'll just keep it going. Let's see, man. A lot of NVIDIA talk still. Wow. Dividend dude, what's up, man? Sorry, I'm just now seeing this. Welcome to the stream. Hope you're doing good. Having a good day. Yeah, Stephen Fiorillo is your guy, Matt. Okay. Let's see. Just keep scrolling down in the chat here. Okay, this is a good question. Interesting screen name, but I have a 100K portfolio, which is awesome, but only 20K or so is in dividend growth stocks. The rest is in Kings and ETFs. What percentage do you recommend to be in dividend growth stocks? That's such a, it's going to be, truth be told, it's going to be impossible to give a definitive answer about that. Cause I just don't know anything about you. I don't know anything about your time horizon. I don't know anything about you as an individual. So it's tough to say, but I will say this though about Dividend Kings. And what I'm about to say is the not at all how I thought when I first got into investing. When I first got into investing and really leaned into dividend stocks, I thought dividend kings and dividend aristocrats were the way to go. I thought, yeah, okay, 65-year dividend growth streak, what could go wrong? For me, that was like the surest sign of stability and whatnot. And it is an indicator, but it's as time has gone on and with more experience and just learning about this stuff more, I've learned that, you know, dividend kings, it's anything can happen to any stock at any given time. And we've seen that with a few dividend kings. So I will say if, and I don't know your reasoning, but if you at all think the same way, it's, I'm going to put money into this dividend king because just because it's a dividend king and it's got a good growth history, then I would maybe try and reshape that thinking because, dividend kings are just as likely to, not just as likely, depends on the company, but they can certainly cut their dividends in any time, just like any other company. So I see we've got a few super chats here, a couple more from Ricardo. You are loading us up with those super chats tonight, man. Oh, no, it's not from Ricardo. Excuse me. It's from Razak, $10. Thank you, my friend. I have 82K. Holy cow. 82K in dividend income annually, mainly consisting of SCHD, Devo, Realty Income, a little bit of JetQ. I live in New York City and I need more income. What are your thoughts about adding SPYT, one of the Defiance funds? So just a disclaimer, I'm not familiar with this fund, so I'm probably not the best person to ask about this, but let's just take a look at it real quick. And thank you so much for the super chat. We have another one right on deck here from Investment KD. It doesn't look like there's a comment attached to it, just $2. But thank you so much for the super chat as well. Man, you guys are crushing it with these super chats tonight. So anyway, let's take a look at SPYD real quick. So first and foremost, what is this? This is an ETF by title. Invest in public equity and fixed income. For its equity, it invests through derivatives and through other funds in stocks of companies in different sectors. Okay, so it's basically uses options, so covered calls, puts, stuff like that. Okay, the objectives seeks current income. That's primary objective. The secondary objective is exposure to the performance of the S&P. Sounds fine. Strategy involves holding shares of other passively managed funds that seek to track the performance of the index, whatever the underlying index is, and selling daily credit call spreads on the index. Its daily credit call spread strategy consists of selling a call options and simultaneously buying another call option at a higher strike price for income generation. So this is why I'm not going to be the best person to ask about this, because I've never traded options. I'm only mildly familiar with covered calls and cash secured puts, only mildly. So this already is over my head. Yeah, I mean, most of this is in the S&P. Got some probably government bonds here. Okay. So I don't know, man. And you're only getting, in the last 12 months, you're only getting a 5% yield. So to me, that seems like something very complex for just a 5% yield. But let's say that we were to average this out here. So let's say, because I think a lot of times that's how these funds do it. They'll take the most recent payment. So 33 cents. So times 12, they'll average it out for the whole year, divided by 20.21. I didn't even look to see if this is a monthly payer. I think it is. Yeah, it is. So when you do it that way, with the most recent payment times 12, that's going to give you the projected annual income at this rate, divided by the current share price. That's going to put the yield at about 19.6%, which obviously is a lot higher than this near 5% yield. So I don't know. What's the question again? So what are your thoughts about adding SPYT? In general, I would say no. I'm not going to tell you what to do. Obviously do whatever you do whatever you want. But in general, I'm just so much more partial to investing in just normal ETFs that just go long in companies like your SCHDs or your QQQs or your VUs or whatever it is. I'm just so much more partial to something like that from a long-term perspective than I am investing in covered call ETFs. And this is why part of that's because I don't understand it. Another part of that is because of the variable income. And some of the covered call ETFs like JEPI and JEPQ, I think have done pretty fine since inception. I actually think JEPQ has outperformed the S&P on a total return basis since inception. But I personally just feel so much more comfortable investing in companies that produce goods or offer services and make money that way. And that flows through their income statements or whatnot, and or their financial statements. And then what's left over is part of what's left over is paid out to shareholders. For me, that's just so much more straightforward than any of these covered call funds. And I think that the covered call fund is a tricky one because there are new investment products, because that's what it is. It's a product. There are new investment products coming out to market and being sold to investors every single day. It seems like every time you turn around, there's a new covered call fund. And it's been that way for decades. Like you can go back and look at articles in the Wall Street Journal from the 80s, and there were advertisements for like similar ideas for income funds like that. But I don't know, man. It's tough to say. Like if you need more income though, I don't know. I don't really know what the best course of action is. I would default to saying the best course of action is going to be the one that's going to be the most sustainable. And I just can't say with any degree of certainty that something like SPYT is that. You might need more income today, but you want to make sure that that income continues to go up and doesn't go down. I think if you were just hungry for income and went after the things with the highest yields, I think more often than not, you'll end up with things that will decrease their dividend payments per share over time. And obviously that's the exact opposite of what you want to happen. So I think you're better off deploying some more patience, even if that means investing in things with a lower yield. If there's a bit more, I don't want to say certainty, but if you have some more confidence that those dividend payments won't fluctuate to the downside over time. And with a lot of these covered call funds, you can't be confident about that because it just depends on so many things. But so I personally would feel better I would feel better putting more in SCHD or like Realty Income or something like that, me personally. So this is a good question. For Mountain High, why is the sky blue? I actually don't know why the sky is blue. Thank you so much for the $5 super chat, by the way. Let's go look this up though. Why is the sky blue? This is what every dividend investor wants to know. So the short answer is sunlight reaches Earth's atmosphere and is scattered in all directions by the gases and particles in the air. Blue light is scattered more than the other colors because it travels in shorter, smaller waves. This is why we see a blue sky most of the time. Interesting. Thanks for the super chat, man. That's too nice. Too kind. I think this is the most super chats I've ever gotten in a stream. That's cool. Let's go. I've had this song stuck in my head all day. The Cars. I like the nightlife, baby. She said, I like the nightlife, baby. All right, let's keep going. This is a fantastic question. Joey, thanks for tuning into the stream. And I see we got another super chat from Mountain High. Real quick. Sorry, Joey. I'll come back to your comment. I promise. Why is the grass green? Another $5. Okay. I don't know, actually. These are the important question. Why is the grass green? It contains chlorophyll, a pigment in its leaves and stems that absorbs red and blue light from the sun and reflects green back to the light of our eyes. Interesting. Mountain High, you are coming in hot with the good questions. Okay, let's go back to Joey. Sorry, Joey. Yeah, here we go. I'm curious if you've ever discussed what your end goal / retirement looks like financially. Yeah, dividend or act balance goal. It's so interesting. I feel like this has changed. I don't really have a concrete answer on this because it is something that has changed and probably will continue to change over time. I mean, my end goal ultimately would be to have my dividends pay my bills, pay all my bills, right? I think that's the dream. And that being a reality is just with consistency and discipline and continuing to do this, it really is a matter of if, or excuse me, it really is a matter of when it will happen, not if. It's, in my mind, it's a certainty that at some point I will get there. I think I could, at this pace that I'm going, I could probably get there in the next, realistically, probably 20 to 25 years. But, things, like I said, things have kind of changed for me over time too, in the sense that I don't feel as much of a rush to get there now, get to the point where dividends are paying 100% of my bills. I don't feel as much of a rush to get there today as I did when I first started investing. And the main reason for that is just because what I'm doing now, I mean, I get to do this. I'm fortunate enough to do this YouTube stuff full time and write my newsletter full time and everything that's under this umbrella. This is my full-time job. And I love doing this. This is something that in some way, shape, or form I want to be doing until I'm just no longer here. And being able to be in this position has I think really helped me slow down a bit when it comes to that end goal. Because this YouTube and also investing really there is no end goal. It's an infinite game that you can keep playing, and these are both things that you can do for the rest of your life. And I plan to do both of them for the rest of my life. But as far as I think what you're looking for is like, when will you start living off your dividends, right? I used to think, when I was in much more of a rush, I used to think like, as soon as my dividends are paying my bills, like I'm done. Like I'm out of my job. I'm good to go. I'm financially free. I'll start using all my dividends, whatever. But now because I've slowed down and I feel like, I really enjoy what I'm doing and I don't feel as much of a rush to get to that point. I feel like I probably will maybe start pulling, and it just depends. Like, let's just see what this next decade, these next 15 years or so look like. But I could potentially see myself starting to use some of my dividends when I'm bringing in maybe like $2K a month or whatever. If I'm at a point where I'm able to bring in $24,000 per year in dividends, depending on what life looks like at that time, I might look at things and say, I can afford to pull out $1,000 a month and use that to start paying some bills or whatever. I could see myself potentially doing that. But I don't know. It's hard to say. It's like I said, it's one of those things that has changed from when I started investing till now. And I would imagine it will continue to change as life goes on. And I think that's, I think that's kind of the fun of it. At least for me, I think that makes it fun, and that definitely keeps it interesting. But in the meantime, man, the ultimate goal is just to keep on keeping on, just keep putting as much as I can into the portfolio and just, yeah, just keep doing it. So, cause I love it. Everything that once again, I'm so fortunate. Everything that I get to do, I really love doing. And so it's awesome. So, but there's been definitely like I feel like the deeper that I get into this stuff, both investing and also just the more the channel grows and everything I'm doing grows here, I feel like weight is kind of coming off the shoulders and it just feels good. So I want to do this as for the rest of my life. And I'll do this as long as you guys will have me. So, so real quick, Tyler here, $2 super chat. Thank you so much, Tyler. Got a three, is that a $3,000 or what are you saying here? I got a 3P check month coming. Maybe you've got 3 checks coming in this month. You're dropping $1,000. I think that's great. Like if that's not going to stress you out financially, yeah, put that into the portfolio. Let us know what you're thinking there too. Like, what are you thinking about investing in? So. This is another really good question. So Ryan, if the goal is dividends, does it matter the cost? Dollar cost average up and down to gain more shares to increase dividend income? Not necessarily, but like when you compare, man, so many super chats coming in. We got Zach with $5. Thank you for everything you do for this community, man. Zach, thank you so much. Thank you. I wouldn't be able to do this if it really wasn't for all of your guys' support. So sincerely, thank you. Seriously, thank you. It's a dream. And thank you for the $5 super chat. That's awesome. But going back to this, in theory, no, it really doesn't matter. Hold on. Let me backtrack. In theory, you can still, let me backtrack and rephrase this. In theory, you can still, if your ultimate goal is to live off your dividends and use those to pay your bills, in theory, you can still, you'll get there no matter which direction the share prices go, because it really is just acquiring the most amount of shares that you can to create as much passive income as you can, right? But still, where it does matter is you still want to try and deploy capital in your portfolio in the most optimal way, and that is where the share price comes into play, and that is why it is better to invest in companies when they come down in share price compared to when they go up. That's why it's better to buy Starbucks at $72 per share than it is at $90 per share, because your investment dollars will stretch farther. So you can blindly dollar cost average into whatever positions you want, whatever dividend paying positions you want, and you'll still be generating more cash flow and you'll still be building up your dividend income. But it may not always be the most optimal use of capital. But the same is true when it comes to investing in like dollar cost averaging into the S&P 500 or dollar cost averaging into SCHD. There's weeks where it'll be higher than the previous week. There's weeks where it will be lower. And with like the S&P 500, it's, well, hopefully with all of them, with whatever you invest in over time, ideally things will get more expensive over time, so it matters and it doesn't. It matters for some things, for other things, it doesn't matter. But I don't know. That might not have been the best explanation, but hopefully that made sense. Anyway, guys, we got another $5 super chat here from Shoddy. Hopefully I pronounced that right. Who wants to know, is Ford a good investment? This is a really great question. And I feel like I get asked about Ford quite a bit. Let's go take a look at, see what Ford's been up to real quick. And first and foremost, like before looking at the financials, before looking at the dividend stats, there's no denying that Ford is an iconic, legendary company. Okay. There's no denying that at all. In general though, before we get into this, in general, the thing about auto manufacturers is that they are extremely capital intensive because there's a huge reliance on manufacturing. And every single year when they come out with the new models, they have to refinagle their factories to accommodate the new models. And so, there's constantly money going into the manufacturing side of things. And so that can eat into the profitability of these companies. And that's why we'll see, I would imagine if we go over to Ford's financials, we'll see they have pretty dang low margins, right? So, their gross profit margin is only 8%. Because it takes a lot of money to make these vehicles. So anyway, so that is the thing to keep in mind. But does that necessarily make it a bad investment? I don't think so. It just kind of comes with the territory of investing in a company like this. So anyway, just something to keep in mind. But anyway, looking at things on an absolute basis, you know, revenue, okay, it has gone up over the years. There was a period from 2019 to basically, well, 2021, those couple of years, it was really tough. Revenue really dropped off. But since 2022, it's definitely picked back up. So I would say, with the exception of these 2 years here, revenue has been trending upwards, maybe not super duper aggressively, but still it's there. The gross profits have, on an absolute basis, have been pretty flat. In fact, a lot of years, the gross profits have gone down. You know, from 2015 all the way to 2020, it really sank down. 2021 to now has been a bit better, but still, that's not really much progress compared to 2015 and 2016, right? So I don't know. I'd say that's kind of a yellow flag for me. That's not a fantastic sign. You'd rather see it go up steadily, and there's plenty of other companies out there that offer that. You know, net income's been very interesting. There's been some years where it's been negative. So overall, I think we're going to see some debt on the balance sheet for sure. So yeah, let's look at the net. $126.5 billion of net debt. And if we look at the cash flow, it's not great. So, and I think they had to cut the dividends somewhat recently too, right? The yield's at 5% right now, but yeah, so there was a period too where they reduced the dividend. It's kind of been all over the place. So I don't know. I personally think there's a lot better investments out there than Ford, and there's not really much that looks interesting to me about investing in Ford. So that's just my personal take, though. I'm not entirely sure what the draw is to a company like Ford, aside from just the fact that it's been around for forever. The financials don't really do much for me. So, okay. So this is a good question here. Salvatore says, sorry, I just want to make sure. There we go. Salvatore says, how do you suggest leveling up the dividend income? This is a good question. I'm actually, I'm putting out a Q&A video on Sunday, and there was a similar question asked in that video. And just in short, there are a few ways to level up your dividend income. There's a few different levers you can pull. First and foremost, you can invest in, and by leveling up, I assume that you mean, how do I increase my dividend income in a substantial way? And the first and most obvious lever is to just invest in higher yielding stocks and ETFs. But, you know, as we've talked about quite extensively, that can be a recipe for disaster. So you need to be careful with that one. But another way to go is just obviously like investing more into your portfolio. The more that you invest, the more contributions you can make, the faster your dividend income will level up. And that becomes compounded even more when you reinvest those dividends. So those are a couple other levers that you can pull. Third and finally, certainly one not to be neglected is dividend growth stocks. You know, it's great to invest in stocks that have a tendency to increase their dividends aggressively over the years. The thing with that, though, I mean, it will certainly level up your dividend income, but with that, you have to have some time on your side, and you have to also have a lot of patience, because the full benefits of dividend growth stocks do take a number of years to really materialize. So it is something you have to have patience with, but that's just the nature of the beast. Like, this doesn't happen overnight. And, you know, that's not an expectation you should have. You shouldn't expect it to happen overnight. So hopefully that answers your question. I think but yeah, those are the few different ways to level things up. So, let's see, keep going here. I hear Peanut meowing. Okay, I'm about 30 minutes behind in this chat, so I'm going to scroll down real quick and keep up. And it's about 6:30. I think I'll I'll quickly just try and catch up in the chat and see where we're at here, and then maybe we'll start winding this thing down here relatively soon. So yeah, let's see. Nice. I see a lot of new people in the stream here. Like Eric here said, congrats on the 100. Thank you so much. Just started watching and listening about a week ago, which is great. Thank you so much for all the support on the channel. I'm glad you found your way here. Keep doing what you're doing, and you'll crack 1K in no time. 100%. 100%, my friend. Ooh, D Nice. Found you from Dapper Livestream. Shout out Russ. Great channel. What do you think of the ticker Allstate? Insurance companies, I don't really know how to look at insurance companies. I kind of stay away from them for that reason. I don't really know what I should be looking for, because it's different than looking at insurance companies, and banks are different than looking at something like Apple or like a Coca-Cola, you know what I mean? So I just haven't really been able to dip into the nuances of those. So Allstate is, and Aflac and all the other, United Health Group, a lot of the insurance companies and the banks are ones that I've kind of stayed away from, just because I just don't really get it. Not yet, at least. In time we'll learn that stuff. But how do you create your videos? So that's a really good question. So the few tools and platforms that I use. So I use Adobe Premiere to edit all my videos. I'm filming on a Sony. I have a Sony A7 III. It's what I'm filming right here. And I use Canva to make all my thumbnails. So, but those are the few main things. So, oh, this is another great question from Shoddy. Thank you for another $5 super chat. Wow. Do you like investing in high dividend ETFs like JEPI? I personally do not. And I kind of talked about this a bit earlier. I actually used to have JEPI in the portfolio for about a year and some change. And I think I sold out of it back in December, somewhere near December. But I don't particularly like investing in covered call ETFs for a couple of reasons. The main reason I would say, honestly, is just because I'm just more drawn to investing in companies that sell something, whether it's a product or a service, and and then pay out a dividend to shareholders, pay out a percentage of the earnings and the free cash flow. And I'd rather receive a dividend that way than from a covered call ETF. Maybe it's just a weird quirk of mine, but I feel like I just understand it better, and it just makes more sense to me. So that's pretty much why I stay away from covered call funds. So. Let's see. Sheldon says, "Hey Ryan, been a while since I caught you. Did you change your streaming schedule by any chance?" No, I have not. Yeah, I pretty much, from what I remember from the very beginning, it's always been 5 p.m. on Friday nights. So yeah, no change in the streaming schedule, but I'm happy to see you here in the stream tonight. So let's keep going though. Okay. That's funny. Ryan needs to read an audiobook. Such a chill voice. That's funny. Thank you. I've never heard that before. But that'd be fun. Oh, okay. So Tyler from earlier with his $2 super chat. Thank you. Yes, 3 paychecks this month. Thinking Coca-Cola, Johnson & Johnson, Procter & Gamble, Visa, and Home Depot. Yeah, I think those are all good options. I think those are all very solid companies. Nice. Johnson & Johnson's definitely been looking good. Okay. Jeff said, so in reference to like retirement earlier, when we were talking about that and plan for financial freedom, Jeff says 25 years is too long, Ryan. It's too long. Yeah, I mean, 25 years from now, I'll be 55 years old. But I don't think so. I don't think it's too long. Truth be told, like I there's some days where like I feel like I'm semi-retired doing this, and that's why I'm so. I mean, it is a lot of hard work. Don't get me wrong, but it's stuff I enjoy, so it doesn't always feel like work, and so that's why I feel like totally fine taking my time with this. But yeah, still planning on getting there as fast as I can. But if it takes another 15 years or so at least, then that's fine with me. Okay. Mhm. Okay, let's see. I'm really scrolling down. Now I'm only 12 minutes behind in the 12 minutes behind in the stream. Sheldon here says, this is a good question. I often see differing views between growth stocks and ETFs versus dividend ones. What are your thoughts? I don't really have any serious thoughts about it. I mean, there's pros and cons to really every style of investing. I mean, there's definitely some people who think who are more partial to growth. There are others who are more partial to dividends. You know, if, as people like to say, the important thing when it comes to this stuff is the total returns. And some people prefer to get their total returns from share price appreciation. Others prefer to get them more from dividends. It just depends. I personally like to have a balance between the two. Um, yeah, and maybe a cop out answer, but yeah, why not seek a healthy balance? And that's why I think dividend growth stocks are pretty good, because they really do give you the best of both worlds. And um, so anyway, but yeah, I really don't have a serious opinion on this. I'm just gonna leave it there. That was about to turn into a tangent, and it doesn't need to be. Okay. I like nightlife, baby. Let's go. Yeah, and Janice says, I might buy another share of Starbucks for all these super chats. I know. I think we're probably pretty close to getting there. Which is crazy. Okay. All right. I'm all caught up now, actually. So Shoddy here asked, do you have any PLD, which is Prologis? No, I don't have any Prologis in the portfolio. I think it's a pretty fine looking real estate investment trust, but it's one that I do not own. So this is nice too. Danny said, so glad I came upon your channel as well as Professor G's. Yeah, Nolan's the man. He's a really nice guy. Great to have two solid dudes share some genuine insight into the investment world. Changed my life in a huge way. Man, thank you so much. That's honestly like the kindest compliment that I can receive. It's always really cool. I'll get these comments from time to time where people will say something to the extent of like, I started investing after watching one of your videos or something like that. And that is the coolest thing. That is the absolute coolest thing, because like Danny said here, like this stuff can be life-changing. It can be life-changing. And so it just continues to blow my mind to hear that some of you out there started doing this because of listening to my nonsense and my gibberish. It's cool. I feel very fortunate. Oh man, El Dynamico says, I am considering trading my SCHD for Starbucks. I don't know, man. I love them both, but I just that's a trade I wouldn't make. I don't know. I think SCHD is such a good. I just think it's such a great foundation for a portfolio, for a dividend portfolio. So I would have a hard time making that move as much as I love Starbucks. So I know Starbucks is on a dip, and maybe that could be beneficial at the end. I don't know. I wouldn't sell out. I don't know. It wouldn't be a move that I would make personally. I would keep SCHD and just continue adding to Starbucks, me personally. So, oh, be still. Great question. How long until a little Ryan Jr. comes around? I don't know. I don't know. Maybe sometime in these next couple of years, we'll see what happens. But I definitely think that'll happen in 3 years or less, for sure. We'll see what happens with life, though. See what happens. Let's see. Steve says, ever buy non-US dividend stocks? I get ideas based on what my kids say. Currently, they want Adidas instead of Nike. No, I mean, there's been a couple of, thank you for the super chat, by the way, Steve, so much. There's been a couple companies that have piqued my interest outside of the United States. One of them we were talking about earlier, LVUMY. So that one's now on the watch list. That one's on the radar. But another company that I have put on my watch list, I've taken it off, is this company right here. This is PAC, which is the Grupo Aeroportuario del Pacifico. I know I butchered that, but basically this is an airport operator or an airport company or airport services company that owns and runs the airports in. Let me go to their website because that'll show it. I think Cancun, Puerto Vallarta. Where else? There's a couple other ones. I think Mexico City, Tijuana, I believe. Maybe company. Maybe that's what we want to see. Oh, Los Cabos, not Cancun. Excuse me. So Guadalajara. Don't make fun of me for my Spanish accent or lack thereof. Tijuana, Mexicali, Hermosillo, Los Mochis, Aguascalientes, Guanajuato, and Morelia, with La Paz, Los Cabos, and Puerto Vallarta and Manzanillo. So anyway, I thought this was kind of an interesting company. What sparked an interest in this type of company for me is I think I don't know. I think I was just in the Las Vegas airport at one point, and I just had a random thought that, like, man, whoever owns this airport or whatever probably makes a really good amount of money. So, but then I started thinking, I wonder if there are like publicly traded airport companies, and I stumbled upon this one, and I thought something like an airport company that is in tourist destinations like this one here, Puerto Vallarta, Los Cabos, probably sees a lot of action. And so I always thought that was kind of like an interesting, that could be an interesting investment. And the financials on this company look pretty solid too, but there's some risk. Some of the risk with this company is just, I don't really understand like how business works down, south of the border. I just don't really understand that stuff, but we can see, guys, I mean, just look at the revenue growth, look at the profit growth. It's extremely profitable. Okay. If we look at the margins, like 85% gross profit margin, 45% operating margin. Actually, this is kind of slightly going down over time. Well, not really. This 45% is an anomaly. It's usually up above 50%. The net income margin looks like it's going down over time. But otherwise, like, there's definitely a lot to like about these financials. Really nice dividend stats too. High yield with a killer dividend growth rate. So double trouble in the dividend department. But yeah, those are the only couple of companies that I've ever really considered outside the US. Thank you. El Dynamico's giving me props on the accent. Thanks. Love it. Patel Ron says 2-hour live stream now. Should we just do it? I haven't heard from the wife yet. So why don't we do it? We'll go 15 more minutes. We'll wrap it up at 7 p.m. Let's see. Investment KD says, I found Rollins and WSO, which is Watsco. That's another really great company. After diving deep, conversation with me and Russ. Nice. Yeah, both of those are solid. Brandon says, I stopped ETF investing as I got better at evaluating individual companies. But now that life has gotten busier, I'm considering putting the dividends I receive into SCHD to be more hands-off. I get that. I totally get that. I would say for me is as time goes on, I've just I don't know. I still really enjoy investing in individual companies, but I feel like I'll try explain this a bit more visually. I feel like that I've seen enough stuff now that I can pretty quickly, certainly more quickly than in the past, identify like the dividend stocks that I'm just not interested in. And there's a lot of them too. Like a lot of these that are on my just watch list here, like I'm realistically probably never going to buy. Like let me see if I can find an example here. Like I'm probably never going to buy Camping World Holdings here. You know what I mean? I'm probably never going to buy like Electronic Arts. Probably not. I'm never going to buy, probably never going to buy Ford, and never say never, but like I just, in my mind, like a lot of these, just I'd rather buy more of the companies that are that I already have in my portfolio. Like I'd so much rather add to Visa than start a position in Camping World Holdings, you know? Um, and so that's kind of where I'm at. Like I feel like it's going to take a lot more for me to add a new position to the portfolio. Whereas when I first got into this, it was, and I think a lot of people, a lot of newer investors can be like this. It's easier to cast a wider net, and it's easier for you to add new positions to the portfolio. And as time goes on, I just see myself doing that less and less. And I think just because of my contributions right now, like the ETFs will become a larger portion of my overall portfolio. Like if we go back over here to the spreadsheet, my Roth IRA, which is basically just the ETFs I own, is almost 15% of the portfolio. So it's a much smaller amount than my taxable brokerage account, which is all individual companies, all these here. But it's catching up. When I started at the start of the year, actually, the Roth IRA, I think, was less than 9% of the total portfolio value. So it's gained about 5% just in this last half a year. And as time goes on, this will become a larger percentage of the overall portfolio, which is totally fine with me, just because in my mind, it's creating a larger safety net and building a more solid foundation, a more diversified foundation that I think will make me feel a bit better about having larger positions in a lot of these individual companies. And kind of like you said, Brandon, I feel like I've gotten better at evaluating companies, but I still could be wrong about, I'm like, there's still going to be instances where I'm going to be wrong. And like, I obviously don't do this at a professional level or anything like that. So I'm totally fine, like giving myself that safety net in those ETFs. And I'm happy to see that growing over time, but I still don't intend on slowing down with my individual positions because I just love doing it. So anyway, another super chat here from Investment KD, $2 here. Thank you so much. Discovered Rollins and Watsco October 23. I mentioned it with Russ. Yeah. Okay. So yeah, we've been October 23. So last year. I bet you I started talking about Rollins maybe a year even before that. I could be wrong, but yeah, it's been a long time keeping an eye on that one. Let's see. Oh, this is awesome. This is a really nice compliment as well. I think you'd make a good father. Thank you. I hope that I will be someday. I think I will too, but it'll be hard at times. I know that, but I'm excited for it. It'll be awesome. Hey, JP Dividends in the building. What's up, man? What is up, man? Ryan, you're a beast. Thanks, dude. You're a beast too. Check out JP's channel, guys. He puts out some really good stuff. Really solid channel. Are you ever going to get Microsoft or Costco? Low yield, but solid dividend growth and capital appreciation. I don't know. That's a really great question. Maybe. I mean, I'm investing in both of them. Actually, here's where I think I'm at with those. And I was kind of talking about this earlier as it pertained to Google, because Google's on like my little, list of companies I might want to buy. But, I'm investing into the S&P 500 every single week. And I kind of feel like I'm okay just having, and I might even I'm kind of starting to feel this way with Apple as well. Excuse me. Like I feel like I'm okay with the exposure that I have and that I'm growing through just through investing in the ETF. So I don't know if I'll ever add Microsoft or Costco. I think they're both great, but I don't know that I personally feel the need to add to those positions outside of um, what I'm already doing with the S&P 500. And like I said, I'm kind of getting to a place with Apple where I might be kind of feeling the same thing. And I've done really well with Apple, and becoming like a smaller and smaller position in the portfolio as time goes on. So yeah, I don't know if at some point, and I think Apple's great. Like, don't get me wrong, I would not sell Apple because I think it's a bad company. Like, I would sell Apple to like reinvest that into Visa, but that's something I've considered doing because I want more. I want a lot more exposure to Visa. So that'd be one way to get it too. So anyway, that's something I'm kind of chewing on, but yeah, we'll see. Things have been going good with Apple, so I'm okay just like letting it run for now as well. So this is a really great question from Brandon, actually. Could you make a video explaining a rough sketch of what you look at to see if a company is even worth looking into? Yeah, I actually have a video like that on the channel. So let me pull up my channel real quick. I'll show you which one it is. It's right there on the homepage. So bear with me real quick. Okay, so let's jump over here. Here's my channel. If you go to my channel, this is the main page here. If you scroll down to this playlist right here, new to the channel, watch these first. Check out this video right here. I talk about that a bit in this video, and there's another video that I made kind of around that same time. Let me go back and find it. That I think I talk about this even more. Right here, this right here, my foolproof way to pick winning dividend stocks. So check out that video and then check out the video on the homepage, and it'll go into, it basically will answer that right there. It'll give you a pretty good outline of the stuff that I look for. So Striper Kid says, Ryan, you should seriously look into Costco. I don't know. I just think there's other companies I'd rather buy. I like Costco enough, but I don't know that I like it enough to want to start a position in it, especially at these prices. Okay, I got another question here about 3M. What do you think about 3M since things have settled down? They're still paying 4.4%, even though they cut the dividend by 55 cents. Yeah, I think the dividend yield is still good, and the dividend yield is still fine at 4.4%. That's still a high yield. I really haven't given much thought to 3M lately, and I'm of the opinion that once again, there are just other companies that I would rather buy in this sector. Like I would 10 times over, I would sooner add to Rollins than I would 3M. I just think I'll get a lot more growth out of Rollins, even though the yield right now is better with 3M. I don't know. I look at this and this just does not like interest me at all. In fact, like gross profits kind of going down over time. The profits are going down over time. So, which is understandable. I mean, 3M is a very, very mature business. It's going to be hard to get more growth out of it. So yeah, I'm just not that interested in owning 3M. And how do I say what I'm about to say? This kind of goes back to what I was saying a few minutes ago about like being able to more quickly gauge the companies I'm interested in and the ones I'm not. Basically what I did with this new watch list, guys, or this newer one with these companies that I might want to buy, I'm probably not going to be spending much time, like unless I come across a new company that I maybe haven't thought about before, or like LVUMY, whoever suggested that to me earlier. I don't know why I didn't think about that one before, but when it was mentioned, it was like, oh yeah, like why didn't I think about that? That is an interesting company that I think could be a good candidate for the portfolio. But anyway, basically what I'm trying to get to is outside of this list, like I'm probably not going to give much headspace to a lot of the companies outside this list, unless there's ones that, like I said, are new discoveries that I haven't thought about before, or something like that. But there's so many stocks that I already know I just don't ever want to own or need to own. Advanced Auto Parts, I could care less about investing in that. Arbor Realty Trust, I don't care. Some of these other ones as well. American Financial Group, I'm just probably never going to own a lot of these. So I guess what I'm trying to say is, like, as time has gone on, I've really narrowed my focus to, intentfully, I've really tried to narrow my focus to the companies that I think could be interesting, the ones that I know I'm interested in and want to buy, and that's going to be Rollins and VICI Properties, and the ones in my portfolio. And the list of companies that I could be interested in, the ones that I might want to buy, that will slowly expand over time. But I just, right off the bat, a lot of companies are just not going to be on there. So, and as my circle of competence expands and I come to understand more industries and just more about things as time goes on, I'll that will be what will build the list of companies I might want to buy. So, ooh, Kevin, I am glad that someone asked this. So I'm actually closing on an investment property next week. This is going to be a fix and flip, and I'm really excited about it. I won't share too many details yet because I don't have too many details, but I think it's going to end up being a really good deal. And I was kind of thinking about maybe potentially when we get through the entire thing, thinking about making a video on it. We'll see what happens. But yeah, I'm excited about this. We're about to close on it Monday, and we'll see what happens from there. So it's going to be a fun learning experience. This will be my first fix and flip. So, and we've had rentals in the past, had one rental. Right now, we have this commercial lot as well. We've had that for a year and some change, maybe a couple years already at this point. And we bought that one at an auction, a steal, really good part of town. It was a steal. And we bought it at an online auction, paid cash for it. So no mortgage or anything on it. Come to find out that it had like an open contamination case with the state, because it used to be a gas station. There's nothing on it right now. It used to be a gas station. And so there was some contamination in the soil underneath. And so these last couple of years, we've been working through getting that contamination taken care of and getting the case closed. And we're just now like at the tail end of that. It's been quite the process, but that'll, and the cool thing is, hopefully, knock on wood, there's a grant program that will actually reimburse you for taking care of that contamination. So we're hoping to get that, but that in itself is a whole nother process. Like that's going to take months and months more to get through. So it's been a process overall, but when all is said and done, that's going to end up being a really good deal as well. It's just taking a long time. But the cool thing is, in the meantime, with that, with the commercial lot, is it's actually cash flowing. There's a construction company doing some work. They have a project at like a courthouse that's near the lot. And so they're using our lot to store all their equipment. And they've been there for months, and they're going to be there for like another year or so. So it's nice that in the meantime, while all this is going on, it's at least bringing in some income. So yeah, things on the real estate front they were quiet for a long time, but it's cool to have another, it's cool to be going through this fix and flip, and we'll see how it goes. I've got a really good feeling about it. I think it's going to end up being a great deal. So, but yeah, if you guys are interested, maybe I'll consider making a video on it. We'll see. Robert says, the $5 super chat. Thank you. Here is $5 to invest in Costco. Guys, I'm starting to lose my voice. It's starting to go. 2 hours. Thank you, Robert. That's super nice. Super nice. I don't think I'll be putting that into Costco though, if I'm being honest. I just don't think I'll do that. I wouldn't want to start a position in it unless I was intentful on, or unless I intended on building it up. And I'm just not that interested in buying Costco right now. So, yeah, Steve says definitely make a video about it, even if you make mistakes. Sure. Okay. Well, kind of what I'm thinking. I might once we close and all that stuff, I might fly back up because it's in my hometown, so like where my parents live. So I might fly back up there and maybe like film a little walkthrough of it at least, and get some footage of that, and maybe do like a before and after, and then talk about the numbers behind it and stuff like that when we get through it from start to finish. So we'll see what happens, but yeah. Okay, we're going to make this the last question here. Sheldon, does withholding tax mean the dividend you get is post-tax? No. So I'm thinking maybe what you're referring to, like if you invest in international companies, like there's a withholding tax, I believe, right? I think this is what you may be referring to. And I should probably honestly Google this because I'm not super well. Withholding tax. Oh. Withholding tax, dividends. Okay. An amount of income that a company withholds that's paid to a foreign shareholder. The corporation pays the money to the IRS instead. Okay. So it just has to do with like investing in international companies. It's just an additional tax on that, but you would still be taxed depending on what type of account that you are investing in. You would still be taxed on the income. You'd still be paying income tax, or you'd still be paying, income taxes on that. So there will be more tax that you'd have to pay if it's not in a tax advantage account. So no, Chris says 3 hours tonight, man. I can't do 3 hours. I think this is actually a pretty good place to wrap it up. 2 hours. Whew, my voice is shot, guys. This was fun though. What a fantastic episode. And before we do sign off for the night, guys, thank you all so much for hanging out with me these last 2 hours. I think this is the record for the longest live stream yet. It was fun. And I guess if we were going to go extra long, tonight would be the night to do it. But anyway, once again, before we sign off, guys, thank you for all the support just here on the channel and in general. 100 episodes of the Happy Hours is pretty crazy. And it's so cool. It's just so cool to know that to see, a lot of the usual suspects every week. It's just cool to be able to do this with you guys. So thank you for everything. And you better believe, like, sometime, well, I guess a couple more years from now, we'll be celebrating the 200th episode. So yeah, anyway, really good stuff, guys. Once again, thank you all so much. Definitely be sure to tune into Sunday's video. Got a good fun video coming out Sunday. You guys all keep up the great work. You guys are all crushing it out there, and have a fantastic weekend. Stay safe. And I'll see you in the next one. You know what? Before I hit the end button, I think I need some Chipotle tonight. You know what I'm going to do? Okay, here's what we're going to do. As soon as my wife gets off work, I'm going to tell her we're going to Chipotle. I'm going to get a pickle burrito. I'm going to post a picture of it in the Discord group. You guys join the Discord group so you don't miss out on my burrito pick. Yeah, there's a link in the description to join the Discord group as well. So join that group. I'll post a picture of my burrito. It might be an hour and a half, but it will be there. Sound like a plan? What do you guys think? Sound good? That's what we're doing. Live stream at Chipotle. That'd be funny. I think it'd be fun to do a live stream on the Strip sometime. I don't have the setup for it though. But anyway, that's the last note. But yeah, sign up for the Discord group. Hit the thumbs up button. Not sign up for the Discord group. Join the Discord group. It's totally free. There's no charge. Link in the description. Hit the thumbs up button on the stream, and be on the lookout for that burrito pick. It's going to be sweet. Last time I went to Chipotle, it was like, oh my God, it was the best burrito I've ever had from there. And I'm not even joking. So, all right, guys, have a good night and have a great weekend. I'll see you guys in the next one.